Hi all, welcome to TCM Education. My name is Michael. I'm the analyst and content creator here on the channel. So let's talk about what happened yesterday in the US equity markets, especially in the 4 stocks that were discussed here in the channel over the last 48 hours. So it was Tuesday, a sell-off day. Yesterday we started with a sell-off and then turned around. What I'm showing here is the S&P and the early sell-off that you see here yesterday. So the continuation play was in the until 11. Okay, so at 11 we started basically to reverse higher, and that was basically the bottom in the S&P, 633, or in this case 632, 632.95. Now, looking at this chart, can you observe a reversal or a double bottom reversal in the S&P? Now, being that I'm looking at charts for many years, I'm thinking to myself, it's very hard to predict this reversal just watching the 5-minute S&P. So again, I myself don't consider S&P as a trading tool. I consider it as a reference tool. So if you're trading a stock like, for example, Apple alongside the S&P, or Google alongside S&P, or obviously NVDA alongside S&P, they should act or react to the S&P way more than the S&P will react to the movement in Apple. So the S&P basically saved the day. Let's put it this way. We'll see immediately what I mean exactly. Saved the day for those 4 stocks: Robinhood, Palantir, NVIDIA, and where was an Oracle. Now let's take a look at each of the individual stocks and how they reacted, and see if as a trader, obviously a day trader, because only day traders are looking at the intraday charts, you can take advantage of this amazing reversal. I mean, the move was from 633 up to 639, so that's $6 intraday. Let's translate it to percentages. That's 1% intraday in the S&P. And how this 1% reversal in the S&P translated in the movement of NVIDIA, Oracle, Robinhood, and I keep missing one, and Palantir. Okay, let's start with the most important stock, NVIDIA. And remember, we started a reversal here in the S&P. You can see 1055, anywhere between 1055 and 11. Let's take a look at NVIDIA. So NVIDIA is actually showing, again, nothing is perfect, and trading double bottoms is very hard. Okay, you have to have a keen eye, you have to react very fast, but if you have a keen eye and react very fast, that's where you can make money. And let's take a look, for example, at this double bottom. Lows of the move were 168.80, and take a look, 1055 exactly. Okay, the move was 168. Let's see, the low was 168.90 here. So there was a 10-cent difference between the double bottom here wicks. Okay, so is this a real double bottom? I would consider it yes. Okay, so 0.01% difference in the reversal plays, and it coincides exactly with the S&P. Okay, that's something that you know in retrospect. Now, if you do observe it, where can you react? At 169 or at 170 or anywhere in between? That's a tough one. What's clear that the stop loss is 168.8. So now, anywhere you enter, you know where the stop loss is, 168.8, or a couple of cents below. So if you enter at 169, you have a 20-cent risk, which is 0 risk for a stock like NVIDIA. If you enter at 169.50, you have a 70-cent risk. Let's call it 0.5%. And if you enter at 170, you have nearly 1% of risk. So now it depends on your strategy. You're buying positions like $20,000 positions, $5,000 positions, $50,000 positions, or you buying shares like I don't know, 500 shares, 1,000 shares, 2,000 shares. I mean, the ability to buy or the liquidity in NVIDIA is infinite. Okay, so what I'm pointing is that if you can take advantage of this type of a move, don't do anything other than wait. And again, this double bottom here carried, let's call it the full risk, 1% of risk, and the entry is 170. Okay, and then the risk is 120 cents. Let's call it 1%, just to make things round things up. So you risk 1% on this stock, and it moves from 170 to 176, which is $6. Let's call it in this case 4%. So it's a 4-to-1 in terms of risk reward, which is great for an intraday trade. Again, not super amazing, but there aren't a lot of occasions where you can trade an intraday play with a 4-to-1 risk reward. And again, this is only if you entered at 170. If you observed it, or you had a key 9 and observed it earlier, you could have been in this trade at 169.50, maybe even earlier. So that's my point. And again, how would I rate how tough is this trade to observe and act upon? It's not very hard to observe, but it's very hard to act upon, I think. Though this is that's my take on double bottom plays, because double bottom plays are coming in the context of a trend which is obviously the opposite. Okay, so the trend is clear to the downside, and now you're thinking, okay, this stock will reverse at 169. Okay, and why would it reverse? Because the SPY reversed. So it's a combination of very, very fast thinking, ability to act, and again, let's say you fail, okay, and the stock continues down, you have the 168.80 as your stop loss, which means the risk is very, very limited, the reward is unlimited. That's the bottom line. Now let's take a look at another trade which was way more exciting. Let me check out Palantir. Hold on a second, guys. You know what? Let's go with the easiest one, and then we'll another stock that showed the double bottom. In this case, we have Oracle. So Oracle, again, a $200 stock, mega mover in terms of points intraday. You can see the low of the day, 228.25, and again, how accurate was the move or the double bottom? On the second move lower, the low was 228.33. So there was a 7 cents discrepancy between the double bottoms. I mean, it cannot get more accurate than that. Okay, so keep in mind it's a $200 stock. So how easy is to observe? Relatively easy. How easy is to act? It's that's something that's very, very personal here. Bottom line is, if you react right on a double bottom play, the risk reward is amazing. Here we had a $6 move on let's call it anywhere between 0.5% to maybe 1% of risk. So the risk was very much limited. Let me show you another example. Basically the best play yesterday, and the best play came from the best stock to follow yesterday. So why Palantir was the best play? It traded huge volume yesterday. It was after a 10% pullback on Tuesday. It started with a gap down, continued down very aggressively, and now the question is, where do you buy Palantir, which is such an aggressive mover? And let's take a look at the timing first. Okay, so you can see the timing. Isn't it like 100% with the S&P or what? I mean, 1055, that's the bottom, the bottom 5-minute bar. You know what? Let's go to the 3-minute bars in Palantir, just to make a point. So if you move to 3-minute bars, it's way easier to observe the bottom. Now, again, the stock takes seconds to move from the lows, which are, let's call it 142.50 to 144. So $1.50 here in 2 minutes. So if you miss this, let's call it amazing reversal. Okay, so you have the S&P on one hand as your guideline. You have the one stock, NVDA or Oracle, or in this case, I think most of the traders were observing Palantir, I think, because that was the most likely to deliver the best move intraday. It was the most aggressive, the huge pickup in volume, so everything lined up. Now, how easy it was to take this trade? I would say it was very hard. Again, because you hesitate for 2 seconds, the stock runs 50 cents. You hesitate another 10 seconds and it's pretty much gone. So instead of buying it at the bottom or near the bottom, you need to buy it at 144, 145. Again, if you buy it at 144 and you risk, again, I'm rounding things up 1%, and the stock ends up at 156 after this move, it's a $12 move. So $12 move in this case on a $150 stock is 8% exactly. So how amazing is this trade? Well, great trade. How is it to execute? I would say very tough to execute. How is it to observe? Way easier. Okay, so it's relatively easy to observe. I'm not sure about executing because again it depends, it varies. You have to make the decision so quick. If you are prepared, on the other hand, with a quantity, let's say I'm buying $10,000 worth of Palantir, then it makes things easier. So you buy a quantity, you have your 1% maximum loss or 1.5% maximum loss or 50 cents, sorry, 0.5% maximum loss, and so you cap your losses. And if you can cap your losses on a $10,000 position at 0.5%, that's 500. If it is 1%, at 1% is 100. At 2% is 200. And I'm talking about, of course, on a mere $10,000 position, which is 60 shares or something like that. Okay, I hope it was clear. Again, double bottoms are very tough to trade. Relatively easy to observe, very tough to trade. Bottom line on a double bottom, those are great risk reward trades. Okay, when they work, okay, the risk is measured, the reward is unmeasured. I mean, can this stock, if you are a day trader, you close it at 156, that's it. Okay, if you're a swing trader, the entry is different because you're not as great as picking up the right stock intraday. But again, as a day trader, you're capping here a move of $12 intraday. It's something that is not going to happen every day. Now, when can it happen? And will happen again and again when you buy a strong stock at the bottom. When you buy a strong stock at the highs, it's not going to move 10%, a breakout of 10%. Show me one stock that delivered a breakout this year. I mean, maybe there were, but I'm not aware of. But from the bottom up 10%, it can happen. From the breakout over the highs, 2%, 1%, that's great. 3% is amazing. So that's why I'm suggesting, practicing these double bottom reversals. Anybody that commented and said those are super tough trades to execute, I agree, but the risk reward is astounding, especially when you focus on the right stocks. Okay, guys, I hope it was clear enough. Let's move on to today's price action. Walmart is reporting earnings today, where is Walmart on my watch list? That's Walmart. The chart will come in a second. So it closed yesterday at 102.57. Let me add the pre-market price section. And that's the pre-market price section. Very ugly, but it's down nearly 3.4%. So if anybody was thinking, okay, Walmart is the next stock to reach the 1 trillion plateau, well, maybe not so fast. Its valuation is roughly 800 billion. Give or take a couple of percentage points that it's going to probably lose today. Now, it's definitely going to be one of the most important stocks to watch, and the question is now, can it deliver a gap down and go? It's not a great day trading stock, let's face it, Walmart. However, on earnings, things can improve. Are investors really spooked by the miss? I mean, the stock missed obviously on its revenue or sales or whatever they missed on. Anyway, down 3%, and I'm not sure that the conference is over, so it may turn around. We've seen plenty of stocks that start actually with a gap down and then turn around. Just to mention one Target yesterday, where the stock started down 7% and ended up down 5%, but basically traded higher all day. So if anybody was looking for a gap down and go, which is where we are as potential day traders looking for the big move, especially in the first hour of trading, it did not happen. So again, if anybody's looking for a stock to trade this morning, it's definitely Walmart, or looking for a trade, it's Walmart. The rest of the market is marginally down. The Qs are down at this point. We are an hour ahead of the open, down 0.36 on the SPY and the Q. So 1/3 of 1% after the strong close yesterday. We have the speech by Jerome Powell at Jackson Hole at 10 a.m. I don't know how the market is gonna digest his speech. I mean, we've heard him so many times lately, and bottom line, he did nothing for the market. Okay, guys, thanks a lot for being here. Do like and subscribe. If anybody has a question or comment, do leave it, and we'll see you, of course, in our next video.